Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Friday, November 2nd, 2012. All right, it's been a couple days. Let's see what the market looks like. Second day of trading since the huge storm, Sandy. And I hope all of you are well in New York and have your electricity back, those of you that are up in the Northeast. One of the things I wanted to look at was that this huge move back. There are a few things that happened. One of them, I wanted to show you Netflix. Wanted to show you specifically Apple, but let's start with the ES. The ES was up 14, 15 points today, and I've got a lot of lines on this, but I don't know if you can see them. This slammed right into the 1421 line of resistance. Now that has been resistance and support since 1999. The 1421 line. Now I explained to it in detail what my thoughts were on that in the first 10 minutes of the video on October 24th. So if you want to look back on that and see what that is, please do. But if we look at this, let's squeeze this in a little bit. If we look at this, actually, the only thing that this did was, do you remember when this was the inside trend line up here from September? Then it breached that trend line, came back up and hit the second trend line, came down, and now it's hitting the third trend line, and this one goes all the way back to June. So this is not the beginning of a rally. This is just a short squeeze, catching people off guard that just catching people off guard, basically. And kind of like end of the month, beginning of the new month. There wasn't a lot of volume. As I mentioned before, this crown right up here, which I've named the Bendragi crown, and the left shoulder and now a right shoulder, I thought there was a possibility. I actually thought it was going to go down, but with the reserve of a possibility of it forming a right shoulder, and that's exactly what it's doing right now. So I like this line in the sand of 1421 right in here. If it gets breached a little bit, that's fine. I'm good up until 1430. And let's see, and just to show you on the 21, one of the indicators that this might take off, and this is what I was looking at, and I knew that the 21-minute cash price on the ES on T1, T2, T3 is moving above 0, but since T4 and 5 were below 0, I was giving it the benefit of the doubt on the downside, and I kind of got my head handed to me for one day. So I'm not too concerned about it. It did take off. The waves actually were right, and I tried to overread them, but they were still in the long position. So in this kind of like cup and handle kind of thing. So it's right now sitting on the 21 cash. It's sitting at the 377. On the 1597. Well, let's look at it. Let's look at some of the trades that could have been done today here. This is from this yellow hash mark all the way over is today's trading, and it got you in actually overnight, middle of the morning. If you're up really early trading these, got you in at 20 minutes past 5 in the morning on the T3, and out at about 1422. Didn't go much below that. Out at 1422 and back in again after right at the end of trading day when it actually took off for a little bit. So that's short-term trading. This is a long-term perspective. We may have a little bit of push through tomorrow with the employment report, or we might just head back down again. Okay, I want to take a look at Apple. Apple's just keeping this lower lows, lower highs, lower lows, lower highs on the daily. On the daily, on Apple, it's moving between all these significant points here. When the 8 crossed the 21 on the exponential moving average, it moved down to the 55 period moving average, went sideways. These are all fib numbers. Came down, moved to the 89, came down, moved to the 144. There's no reason to believe that this is going to do anything else since T1, T2, T3, T4 are completely below zero on the daily, and T5 is probably 1 to 2 days from being below zero for the first time since January of 2012. So I wouldn't be surprised if this comes all the way down at least to 570 and possibly on a push down in the market or a slight panic to 521 to test. I'm not really interested in the 200-day moving average. I think once it tests that, it might go sideways and then come down and test 517 on the 377. Now for daily trades on Apple, very, very clean trades on the 610 tick chart. This moves below zero on T2 at 608.68, and I'm sorry, not 608. What am I doing? Yeah, I'm sorry, 608, okay. And then you covered at 591. So then you can play this again, 591, until it moves up to 598. So it's all kinds of plays you can do on Apple during the daytime using this. Let's see what the let's do the ABC charts on this to see what this looks like. Basically the same thing on the ABC charts. This tremendous move down here on the B wave, and then on the blue wave of the B wave, and then above here, and then below here. So these are like these are very significant moves of 607, 591, back up to 607, back down to 590, and then back up to 596. So all kinds of plays that you can do. You just have to be patient. These little squirrely lines down here are just sideways movement, but any move to the upside is a potential short because the daily has gone down. The daily is below zero on T1 through T4, and T5, T4, and T3 are still below zero on the 21. So any rounded move on the 21, let's make this a 21 over here. Any rounded move on the 21, and this is an Apple is reshortable. And it already went up and tested the 55 period moving average at 600. It failed. It tested it here, it failed. Tested it here, it failed. So we'll just have to see what happens to Apple. But short, medium, and long term, I see Apple going down. It doesn't mean that it might not pop up 6 or 8 points and scare the bejeebies out of you, but it's going down. Okay, we haven't taken a look at Netflix for a while, but I actually thought that Netflix was a slam dunk down to 44. Good thing I wasn't in it. I wasn't in it because I didn't like the way this was climbing up on the daily. The T1, T2 was above zero, T3 was above zero, and in the last 5 trading days, T4 has been above zero. And on the 21 minute, it went above zero on October 25th. So, you know, you really never know what's going to happen to these things. If you were in it on the short side, you were totally not expecting Carl Icahn to come in and buy 10% of Netflix because he thought it was a great short-term buy. But that's what basically has moved the stock from 60 to 85. But like I've said in the past, this stock does move like that. Moved from 68 to 131 and then took a few weeks to come back down again. So whether this is short term or long term, I don't know. It's already, the 21 is already starting to cave over, so we'll see whether that's a genuine sustained move. Goldman Sachs made a nice move above zero on the daily on July 2nd, on July 6th, and it's still up there. So my recommendation a few days ago, when T4 on the 21 crossed zero, was a short-term counter trend trade from 124 down to 120. It reached that. It exceeded that goal down to 18. So the idea is to take half off, half to 3/4 off at the goal, and then keep some very short, tight stops in to follow it, and you probably would have been out at 119. Okay. On the other hand, as it goes up and then sideways, the 21 started creeping up and started moving up on yesterday's trade. Let me see if I can find one. Okay. Okay, so the best one is right here. Let's see, let's stretch this out a little bit. Okay, this is the first attempt above zero, the second attempt above zero, which was you let that one go, you go with that one, and definitely in here. So that was a 119 to 124 play, and it's still, as far as I can see, it's still in play. The 21 is about to roll, the daily is about to roll over here, so you got to play this very close to the chest on the upside, because this may be running out of steam on the upside. These are starting to roll over here. All right, Amazon had one of its spectacular days when they came out with earnings and went all the way down to 203, then popped up to 237. It did that a long time ago, back in actually I think it was last year, that it came down with earnings and then snapped back up again. But since that time, let's see what the daily is. Okay, since that time, let me see. The T1 has gone below zero, T2 is below zero, half a T3, so this is making its way down in even T5, and that would be the first time since July that it's been below there. So Amazon might just, it looks like it's moving its way down. It came up, hit the 377, tried it again. It's moving flat for the last couple of days. Well, this day was down six or 7 points yesterday, but the 8 and the technically just on the cash prices, the 8 crossed the 21, and they both crossed the 55, which means and the T1 through T3 are going down. So I would have a sell with caution on Amazon. Use tight stops. Okay, Baidu is one of those stocks that I mentioned that was the stock that I mentioned that I got tired of waiting for its down move. It's been going sideways for about 2 months now. And the only reason that I liked it on the downside was because T5 was below zero and T4 was below zero the entire time, and also T3. But it just wasn't moving. So as soon as I got disinterested in it, it dropped. It dropped 7 points the other day. So that's just called trading. It looked like it was gonna go down here, and I just lost interest because I thought it was just another sideways move. But that's what happens. You think you know something, and then it doesn't happen. You get disinterested in it, and then it happens. So chalk it up to trading, or the lessons of trading. Okay, and lastly, Google. Um, Google had a tremendous move. I think this was an earnings move. It started, and obviously there was going to be some kind of kickback. Can't keep going straight. Even things that go down have to pop up once in a while. But today, T2 went below zero. Whoops, let me see. Recapture that. T2 went below zero, and since T1, whoops, let me see here. T3 is moving above zero. T4 is moving above zero. So if the market has any kind of a move, this may go up and hit the 377, which is 707. So the potential target of 706, 707, which is also the 21 period exponential moving average. So, and it's also almost a 50% move of this entire move down. So that is shortable as long as T5 is below zero and T1 is extended and turning down and coming below zero. So let's look and see what this looks. And you can see the same thing on the ABC waves. Let's look at the let's look at Apple on the ABC. Oh, we already looked at Apple. Let's look at Amazon and the ABC waves. Okay, Amazon had some nice plays actually on the ABC waves here. This is the 21-minute on the Triton waves, and if we move to the ABC waves, they're a little bit jumpier, but still fairly clean. Okay, so the ABC waves are showing that basically the same. In fact, I'll put them side by side. So the C wave is in coordination with the Triton wave over here. So if you have the ABC waves, you can see that, and you can play them accordingly, just the same way. So again, this looks like it may want to go up and hit the 377 on Amazon, even though this is starting to trickle down. But on the daily on both of them, here's the daily on the Triton waves, and this is the daily on the ABC wave. So they're both heading down. So any move to the upside on Amazon to the 21 period exponential moving average on the daily is shortable. So 239 is shortable. That's the wrap for tonight. Good luck trading, and I'll see you enjoy your weekend and daylight savings time this weekend. So I will see you at the next update.